The tax regime in the North Sea for those that are drilling for oil has changed in the last year or so from the current government. Let's get an update of where we are and what's likely to come out of some decisions the government has to make from the Treasury in the near future. Joining us now is Derek Leith, who is partner at Ernst Young. At the Oil Council, talking about what's been going on generally for oil companies, it's interesting taking this look at the fiscal changes that have occurred here in the UK for the North Sea. How do you see things that have changed? Have they been good changes? Have they been taken advantage of?
Well, certainly the budget of 2011 was greeted with dismay by industry, because the tax rate without any kind of prior announcement was increased from 50 to 62%. And what that meant is Oil and Gas UK did some research after the budget, and they found that at least £10 billion worth of investment that would have been made was likely now not to happen as a result of that tax increase. So the kind of starting point was that was very bad news, and industry was reeling from it. What industry has done since is it has focused its attention on certain types of field to try and get some fiscal incentives, and has worked very hard to deal with the decommissioning security problem, which is essentially an impediment to fields changing hands. So we've had some good results on the fiscal incentives, because we've had some field allowances, and most recently a brownfield allowance announced. That's basically an allowance for an incremental investment in an existing producing field. And then in relation to decommissioning security, the government's already made certain statements supportive of the fact that they will introduce changes in next year's Finance Act, which will enable us to move to a post-tax security.
So from pre-tax to post-tax, yes. And that's going to make a big difference, isn't it?
Yes, because decommissioning now is only allowable for corporate tax purposes at a rate of 50%. So even if you just look at corporate tax and ignore petroleum revenue tax, you would move from having to provide a security of, say, 100 to providing one of 50, and that 50 that's freed up can be invested in the field.
What about the autumn statement, the next budget report we're going to get? What's expected to come out of that?
Yes, so we expect in the autumn statement, we had a consultation on decommissioning security. We expect to have some feedback on the representations that were made, and then more importantly, when we get the draft finance bill on the 11th of December, we expect some of the draft provisions to be in there, enabling this to take place.
What about the reasons behind this? Is it to make it easier for those that are there to drill more and produce more, or is it the change in the fiscal regime, is it to bring more companies in to the North Sea?
I think essentially it's to do both. There are people that have got assets on their books at the moment that they feel aren't commercial with a tax rate of 62%. Some of these field allowances help. There are other companies that can't attract capital to develop some of the prospects they have because their capital is being allocated elsewhere in the world. So what's important for them is to be able to move the assets on to maybe independents or newcomers who are prepared to invest in these assets. And fixing this decommissioning security problem will enable there to be a more liquid market in assets in the North Sea.
So is that going to make it a more appealing place for companies that aren't there to come in? Because I'm thinking of the other aspect of government policy, and that is one to try and get rid of red tape. Is red tape an issue in the North Sea?
Yeah, well, I imagine red tape's an issue for anyone doing business in the UK, but probably the oil and gas sector, because it's quite highly regulated, they're more used to dealing with red tape than maybe some other companies. But yes, I mean, I think the UK is increasingly becoming a more attractive environment in general tax terms. When you look outside of oil and gas, because the tax rate's coming down and Britain's open for business, and we see some of these things happening. But within oil and gas, we still battle against the fact that we've had 3 tax increases in the past 9 years, and the impression that creates with investors.
Derek, one final thing. What about the outlook for the UK continental shelf? Where's it going? What's the word?
Yeah, I'm optimistic. Last year we saw a reduction in production of about 18%. That's down to a number of factors. With the announcements of some very large developments last year, like the BP Clare project, and more recently Shell announcing the development of the Fram field, I think we'll see production levels in the UK increasing in the medium term, which has got to be great news.
Good for government coffers.
Absolutely good for business and good for the country.
Yeah. Okay, Derek, it's a pleasure. Thanks for taking time to join us. Derek Leith, partner there at Ernst Young.